Introduce the amazing panel here. Next to me, I have at Cluss. He's a partner at Zynga Venture Partners. He has been a CEO of several venture-backed companies, most notable Infogear Technologies that was acquired by Cisco for $300 million. Within gaming, Ed is a board member of C Games and MindPirate and involved with other Zynga investments such as FunPlus, Super Evil Megacorp, Grand Crew, Artillery, Rumble Entertainment, Red Robot Labs, Idle Games, and the most notable exit within the gaming space was the Funzio acquisition by Gree. Next to Ed, I have Phil Sanderson. Phil Sanderson is a managing director at IDG Ventures in San Francisco. His investment focus is primarily in gaming, music technology, e-commerce, search, and ad tech. His current investment in the gaming space include Plain Vanilla, Next Games, Telltale Games, Midverse Studios, Fresh Planet, Hammer and Chisel, Addiction, and Playtech, and previously was an investor in Funzio. And you can follow him at his blog at sfvc.com, and I think the Twitter is San Francisco VC. So if you're interested in the space, he covers the gaming space amazingly well. Next to Phil, I have Greg Ballard. Greg Ballard is a senior vice president of social, mobile, and emerging platforms at Warner Brothers, and he also heads up the Warner Brothers game studio here in San Francisco. Greg served as CEO for many media and tech companies. Most recently, he was CEO of Glue Mobile. Greg is presently on the board of directors of DTS and has served on the board of Xfire, which was acquired by Viacom, IGN, and many others. And Greg also led the strategic investment of Warner Brothers in Kabam. And next to Greg is Sandy Miller. Sandy is a partner at Institutional Venture Partners, IVP, a premium later stage VC and growth equity firm where he focuses on later stage investment in technology, internet, and digital media companies. He was recognized as one of the top 100 VCs in the world by his inclusion in the Forbes Midas list since 2007. He previously co-founded Thomas Weisel Partners and run U.S. later stage venture investment firm 3i. Sandy has served on over 25 public, private, and philanthropic boards and led investments in gaming companies such as ngmoco, which was acquired by DeNA, Zynga, and Supercell, amongst many others. So amazing have all of you on here. Maybe a quick question on the audience. Who of you is currently is leading or works for a venture-backed company? Maybe just raise your hand. Okay. Is not too many. Who of you is planning to raise around within the next 12 to 18 months? Okay. So a lot of them currently don't have venture money at all. With that starting off, about 80% of the top grossing apps on mobile are games. And at the same time, it seems like the universe of investors within gaming actually declined quite a bit the last 1 or 2 years. Any thoughts? What's going on? Either of you?
Yeah, I think there's been certain expectations that have been set by companies in the market. Certainly Zynga, which was a great investment, on the private side. Certainly, expectations were very high when it went public, and it didn't meet those expectations. So what I call the Zynga effect really kept a lot of people out of the market. And then the general view that gaming is a hit-driven business, and you really need to get lucky to be successful. Because of that, there are very few venture investors out there. I think, Zynga and IDG Ventures are probably two of the most active venture investors in the market. I'm, personally doing 6 new game investments a year. And, when I talk about syndicating to other VCs, they say, well, we were doing venture investing before in gaming, but we're really not doing as much anymore because of, that Zynga effect and the hit-driven business model. I actually don't think it is necessarily a hit-driven business model. I think companies, like Supercell have proven that you can take a hit model, what they've done with Heyday and Boom Beach, and really taken an existing business and reskin it and change it a little bit and create, hit games and cross-promote with existing users. So it's a great industry. It's growing quickly. I think recently venture investors are starting to be keen to that and start to do some more investing.
Great. With that, I think it would be helpful for the audience when you do make investments, what are kind of the most important things for you? And it's kind of interesting, we have seed, early stage, strategic, and strategic might be, equity investment or acquisition, as well as later stage, so the full spectrum. And I think it's very different what you look at in order to pull the trigger on a deal. It would help to just what's your sweet spot and what's most important. Maybe Ed, if you start.
We first thing we look at is the team. So there's so many opportunities out there right now, and we've invested in many. We just find people learn a lot the first time through. So it's almost impossible for us to invest in someone who's never built a game before. So I would just say it starts with that, and then I think. The other thing, just taking up what Phil was saying, we kind of always viewed Zynga as really being an analytics company more than a game company. And so a lot of what's going on right now is people are looking more to the east and how Korea and China are building more enduring games. And so we sort of, look for, teams that have a great idea, a lot of passion, but know it's going to be a long time to build a really enduring game that's going to last for a long, long time. Because the idea of this panel is how do you build a billion-dollar company, and that's a different company than an analytics company that's trying to build some games on the side. So we think those are some of the things that we certainly look for, and also transparency. So some of the basics in building any company apply here. You want to have a good relationship with somebody because you're going to work with them for a long time, and so all those things matter.
Great.
Yeah, I think on the venture model, like Ed was saying, definitely teams. There's certain segments that we look at too. We have certain theses. So we're very interested in mobile games, definitely mid-core games, and we've seen a trend from moving a little bit more hardcore from the middle. That's been a big thing for us. We had a trend, a thesis last year around just trivia-based games. So we invested in plain vanilla games because we seeded them with Quiz Up and with Fresh Planet. Fresh Planet has Song Pop. They now have 100 million downloads. So there's certain areas that we like. A big trend we have today that we're going after are IP-based games, because if you can strike the right deal or with the right partnership, like with a Warner, for example, we find that you can really battle the high CPI costs because you have the users come to you because you've got such a great property anyway, and you end up paying that on the back end to a strategic partner who has the IP. So it's more like performance-based acquisition costs.
So Michael's right. We're at a slightly different position at Warner, and I've been on other sides of this table before, so I think I have a slightly different perspective perhaps than the other panelists up here. When we were first setting up our mobile business, let's say 3 years ago, we were very interested in a company to acquire that would have a full range of capabilities, not just development capabilities, but publishing capabilities as well. So we were as interested in, the people who were doing user acquisition as we were in the people who were doing the games themselves. It was one of the reasons why we fell in love with Funzio. I'm still crushed that we didn't get that deal. We were outbid by 3-4x. But we were right in there at the very end. And so as things have evolved for us, we've now built up our own capabilities internally around publishing and around development, to tell you the truth. So we're no longer the acquirer that we might have been in the same way, let's say 2 years ago. So now we're much more interested in games, in studios, in things that would add something different in terms of capabilities to our ability to produce a game. We don't see a lot of value in companies that come with additional publishing capability. We'd view those as redundancies. We'd probably take them out of the deal calculations entirely. So again, we've evolved. Not every media company, not every acquirer has done that, but we made a decision 2 years ago to build it on our own. And frankly, we've probably created a tremendous hundreds of millions of dollars worth of value at Warner by starting it from our own, but we are still looking to build as we can, sort of brick by brick now instead of household by household. So it's a little bit different.
Sure. So our perspective also is different. As a late stage investor, we're looking at game companies, and we're very interested in game companies. We are an active investor in the area. But we're looking at ones that are already established, often really already backed by Phil or Ed or others in the industry, and particularly by these two particularly good early stage investors. So what we're looking for is we see companies then at the later stage that have a game or games, have a team, they've got some traction, they've got some meaningful revenue, and our business is to handicap which ones really can make it big, because we're normally investing at a point in time where the valuation expectations are much, much higher on the part of the entrepreneur, and we're paying a much fuller price, and we need to see a much bigger exit as a result. And when I look at the kind of common ingredients now, the one thing that really interests me is productivity. So when we first invested in Zynga, it was really, really productive. Relatively small teams of people in a crowded little conference room, developing some great games, often using analytics to, get the monetization, et cetera. But the game development capability was good and was focused in relatively small teams. They grew out of that, grew into more of a big studio model, which frightens me as an investor, actually. So when Supercell came along, it was already had a huge hit game, of course, Clash of Clans, but it was, they were developing games in, of course, the name of the company, Supercell. Cell means a small group of people. They still use that today, even though they have an extremely large revenue base. The productivity, so I'd rather invest in a situation where there's 6 amazing developers in a room together than a company that relies on studios of 250 or 300 people developing a game. And that's the way of the world. That's, as companies grow, they get more and more to the EA and Activision kind of models. It seems like inevitably. I don't know why it's inevitable, because Supercell proves that you can do it with small teams. So I really would encourage y'all, as you build your businesses, that you build it in a way that it really builds that kind of efficiency factor. Beyond that, of course, we're looking for completeness of team, evidence that it's not a one-hit wonder kind of situation. And I'm excited about gaming, but we're looking for companies that we think really are going to be able to compete in the evolving world where marketing dollars are so important. So I think, I'm trying to think about where to position companies. I mean, you either have to think about, I'm going to get to be a public company, and I'm going to have hundreds of millions of dollars a year to compete with Supercell and King, and EA and Zynga and so on, in marketing dollars for promotion, because you can't go on, you can't do anything today without getting a Candy Crush ad thrown at you, right? So how do you compete with that? Well, the answer is, I think you build a good company that could be a nice acquisition candidate for those people, or you really scale and become a direct competitor. 2 different paths. We could invest behind either one of those paths, but the game is. That's one of the reasons I think there's been a bit of a pall in terms of investment appetite. Is you think about, there's some entrenched competitors with massive profitability and massive advertising budgets, and kind of how do you crack the code on that? But I think it's possible, and I'm excited about it.
Yeah, talking about this next-gen billion-dollar company, looking at the top 10 iOS grossing charts, over the last 12 months, there actually hasn't been a lot of change. Kind of Machine Zone pushed in. That's probably was one significant change, but looking forward, and also the kind of games, it seems there was not a lot of truly new, innovative things that happened the last 12 or 18 months. What do you think is going to be the next huge category? It's going to be that's also going to make it into the top 10. What's your guess?
I'm pretty, Phil touched on it, but I think we're really looking at a lot of hardcore console teams, taking that kind of experience down to mobile devices. And so we think that's that's ripe for a really big outcome. And I think there's a couple of companies that are now, out there, starting to come out there. And I think that's one I'll just say I think we're pretty excited about, an area of investment interest for us.
Any other thoughts?
Yeah, I think the big one, 2 big ones for me are sports and shopping. I don't think there are, of course, there's games in every category, including those, but I think I try to think of what do people do in real life. They're going to want a gaming analog to that. And boy, that's, in my world, basically people are either looking at sports and talking about sports or they're shopping. And so there's perhaps some demos around that. But at any rate, I see those as rather than yet another. Some of these games are just really, Phil made a good point. There's been great success in reskinning games, but at some point they are starting to seem pretty familiar, though it seems to work for a few companies, and those, I think they'll continue to do that. But I think therefore it creates the opportunity for new companies to do something different. It's going to be hard to come out with a game that looks like a King.com game and compete with them when they can spend $500 million a year or $1 billion a year on marketing. So I'd rather go into a different category, and maybe sports and shopping are two that come to my mind that could be ripe for some interesting new intellectual property.
Great.
So the two things that I see happening, I tend to think that the next big thing is sort of more core play, but based around synchronous gameplay. But I don't think we're there yet. I've seen a couple of games sponsored by these guys that I think are just fabulous games. I'm just not quite sure whether the market and the infrastructure is quite ready for it yet. But within a year or two, I think synchronous games that are either MOBAs or other types of variants will be increasingly popular. I think the other big innovation, it sounds like a retread, because it was certainly the strategy at Glue in the early years, is the increasing importance of brands. And it's not innovative in the sense that it's not a new mechanic, it's not a new genre, but brands have brought an ability, as Phil was saying, to acquire customers at a ridiculously low rate in the initial launch. We launched Injustice, for example, which was co-launched with the console title. We had two big advantages. One, we used the assets from the console title, so the graphics in that game were extraordinarily, I would say, superior to what could have been done economically by somebody else. But the second big advantage was we also launched with a $20 or $30 million marketing budget that we were on the coattails of. I don't think we acquired our first customer by paying for, the folks that do that for a living or sitting in front of me, probably for 3 or 4 months before we had to actually actively go out there. We had 25 million downloads so far on that title, and I don't think we've paid for, but a small fraction of them. And when we've paid, we've gotten a good deal on that acquisition. So I think those two things are what we're looking for in the market and hope to take advantage of.
Yeah, I would add a few trends from some of our companies. MOBA on tablet, I think we're going to start to see a lot more there. Hammer and Chisel, one of our companies, just did a recent launch, and I think that's going to be really successful. The other is just generally, I touched on this. IP-based games, I can see them being even more popular. Kim Kardashian, perfect example, with cringing with Glue. Wouldn't you love to be the CEO of that company? And also, with Telltale Games, for example, one of my companies, they've done The Walking Dead. They're doing Game of Thrones this year. And more and more of their business is moving to mobile. Right now, you can download their games to XBLA or PSN or PC Mac. And that we're going to see, I think, a lot more hit-driven and IP-based driven businesses in the mobile sphere because people love the IP.
Great. Follow-up question to the core discussion, like next-gen games, more core focus, more like, what console games are today. But the budgets to produce those games are also very different, much, much higher compared to some of the more casual games today. And does that change the venture model? It seems a significant change. Any thoughts on that?
I don't think the budgets are that high. The real spend is in the CPI, but we're not creating console games, which don't scale. It's really expensive to create a hit game, but on the mobile side, I think people are, and a lot of game companies, and a lot of you guys are doing this, trying a game out with 4 developers, seeing if it works, launching it in Australia or Canada, and seeing if you get some traction, some good ARP DAOs or good D1, D7 retention numbers, and if it doesn't work, scrapping it, moving on to the next one. So it's a model that I think is pretty inexpensive to put out some stuff, and if it works, then you expand on that. So it's actually much more efficient.
I think Phil's right. I think the mid-core or the more serious gamer kind of games is a better spend. I mean, doing casual games has raised, costs have gone up in that. It may be a little more expensive on this side, but the monetization should be much better. I mean, people are still, think of what people are still spending. We talk about console games like this must be something from the, the 17th century. They're still making, they're still generating billions of dollars of revenue. So there's a long life, and it just shows how much people will spend on games. And we know that we're at the tip of the iceberg, I think, what people will spend. So I think they'll spend on these games, and they're worth, if it costs 50% more to develop and you've got a 3x revenue potential, that's an easy trade-off.
I do think budgets are going to go up, though. I mean, let me just pause for a moment, because I know my budget's going up. And I would like my boss to think that I am not alone in the industry in doing that. And we're seeing it from some of our partners, and we're seeing it, publicly spoken. I'm not all games, and in fact, there are some games. We had a recent Greenlight pitch where I was urging them to find ways to spend more, just to sort of make the budget look a little bit hefty, so we can cut it back. But I'm mostly kidding. But the fact of the matter is, there's only so much you can spend on some games. But there are some games that are coming, more graphically rich, synchronous games that I think will start to push the budgets upward.
I'll just throw out some data. When Playdom got started, it was probably a couple $100,000, and back then the money came in so fast. Literally in months you're making millions of dollars. A few years ago, we invested in some game companies. It typically would be maybe $3 million, and they kind of get going. Now we're seeing, early rounds, and we're putting, part of maybe a $10 million kind of round at something. So I think it's probably still a lot less than what the history of games was with console, but it's not like it was 4 or 5 years ago either. So I would happily defend Greg's position.
Great. One more comment on the IP-based games. It's as an investor, if there are any independent studios, would you advise them to try to license an IP? Because, the advantage is with the right IP, you can get much more visibility, more downloads. There's obviously a direct impact in the bottom line. And also, sometimes buyers actually would like to buy companies that produce original IP versus just took licensed IP from a different brand and build a game around it. So there's some pluses and minuses. So just want to get your thoughts if you're looking into investment in a company, or if you already are an investor, what's your thoughts and what would you advise them?
So we're invested in 4 or 5 companies that have licensed IP, and the deals sort of range from paying 15 to 35% on the back end, with a little bit of money up front, or in some cases a little bit more money, but not as much as you would think. And I think it's a great strategy if a young publisher can be able to get those licenses, again, because it does put the cost on the back end, and you can get some good CPI. And there's some great IP out there. And I'm seeing more of the media companies start to be more open to licensing their IP, and get a lot more savvy in that market. And a lot of times I've seen companies be really successful with just bonding with the IP holder, not necessarily the owner of the license, and be able to convince the IP holder to get that license, which are pretty amazing. Actually, when Plain Vanilla Games got Twilight, and that was a great license, and there was just a handful of people, right? And they produced a pretty good game with Twilight and used all those learnings and the money they made from it to create Quiz Up. So I think it's a good strategy if you can get it, but it's not easy.
Okay.
I would say we just look at the economics of the deal. So if you can cut a good deal, that's great. And I would say in our history of doing it, there's the Kim Kardashian approach, where it's the whole image of the game. But we invested in a car company 4 years ago, and they went around the world and licensed from all the various car companies, Lamborghini and Ferrari, and then cut deals with tire companies and different things. And we generally tracked that about a third of the revenue that the game produced was from the product licensing that we did, and it was still really their brand, and they can control the image of the game. So I think there's sort of like the big licensing deal, and then there's the smaller licensing deals, and I think they both can possibly work. You just got to make sure the math works out. That's all.
I think the margins in the gaming business are high enough that you can afford to do in these intellectual property deals. I mean, some industries you just don't, you give away, 15 to 35% of your top line and you got nothing left. But this is one where there's still, even after paying the platforms, et cetera, it's still a pretty profitable business. So I think there's room for it. And it's if you have to think about, I guess I'd rather see a company spend money on that than a young company spend it on kind of uncertain marketing. But that's your back end versus front end, I guess, approach, Phil. So I think there's a real role for it. I'm sure we'll see more of it.
The one thing I would caution anybody who's thinking about it, though, is make sure that the game that you develop is inspired by and services the brand, as opposed to having the brand just sort of be slapped on whatever game you happen to have already developed, because brand holders notice it, but more importantly, consumers notice it. And if you're just sort of using the brand to get visibility, that isn't enough. It's got to really be something that is driven from the brand, and then I really do think it can connect with consumers, save you acquisition costs, and really sort of differentiate in a sea of games.
Great. Also thinking about the next billion-dollar company within the Western world, what do you think is going to change on the monetization side? I think, Ed, you mentioned, you compared kind of I guess you mentioned the Zynga model versus the Korean Chinese model. What can you share with the audience, at least what your vision is, what the focus will be moving forward?
Yeah, well, again, I think, Zynga had a lot of advantages early on because there was a lot of spamming that would go on Facebook, and so there's a lot of things that just don't happen anymore. And when we talk with some of our partners in Korea and China, when you look at how they build these really big companies, they really focus on long-term engagement. So there were a lot of games that were built where you'd say, okay, well, it'll last for 2 or 3 months, and it'll burn out over time, and then we'll go build another one. And boy, you really need to be in the hits business then to do it. And when you look at a lot of the Asian companies, they just really approached it a lot differently. So it's not like you don't want to eventually monetize, but unless you get the retention and engagement really nailed down, you just can only go so far. So that's, I think that's and we're starting to put a lot more money into these games. And so, as we put more sophisticated games on mobile, I think we have, more of an eye towards long-term engagement than we maybe did a few years ago.
Okay, great.
I think the Asian model Zynga is the Asian model, actually. I mean, it's all freemium. I mean, I think it's a complete non-starter to try to charge for a download today. I mean, you'll fail. So it has to be freemium. And you can obviously, I think we'll see a much richer context of what the kinds of things people have the opportunity to pay for, and which will presumably enhance how much they're paying. Right now, a lot of it's too simplistic of just some extra ammunition or something. I mean, I think it'll get more sophisticated, and we'll get more money out of the people as a result. But it's all freemium model is the only way that can work.
Yeah, I think we've been presuming that. We haven't looked at anything that hasn't been freemium, so.
The one exception to that, we do have a remaining premium business in the kids area with Lego games. It's very difficult to get a kids game, not impossible, but a kids game that's truly a kids game to monetize in the free space.
Yeah, and then there's Minecraft, which is paid.
Yeah. Well, you're right. Kids could be different. Want to license a Lego brand?
That's hard.
Everything is awesome.
Just on the Zynga topic, we actually invested in a company. It's not a game company, but we actually think that Zynga has created a lot of really good analytics people. So a lot of people are leaving Zynga these days are actually going off to build better analytics company in e-commerce and some other things. So just as an aside, we're kind of sticking right to the game theme, but as investors, there's a lot of other interesting opportunities around those kinds of companies where they, in fact, one of the areas we're investing a lot, it's not a game per se, but you see gamification is health services on mobile, where you start to do things like handling childhood obesity by making an interesting app that has some game attributes to it and helps, children lose weight. So we're looking at a lot of people that are experienced in those sort of game technologies and applying it to completely different industries now too.
Great. Looking at some new platforms, I mean, Facebook did the $2 billion acquisition of Oculus. Google is coming out with the next version of Glass, Google Glass. Looking at those two platforms specifically, is that something you're excited about? Do you see that's kind of a, people developing apps for it? Is it something you think will pay off in the near term, or how excited are you about this segment?
I'm not immediately excited. We've actually had some experience in this. We worked with 6 companies that build apps on Google Glass, and it's just going to take some time. There's not enough of them out there. They're too expensive. So as it relates to Google Glass right now, there's probably more interest in investing in enterprise apps than there are probably consumer apps. But it's going to come around. It's just not what all the big companies are going to put their money behind right now. So I feel good about it in the long term, but as an investor, I wouldn't invest in a company today that was going to focus on a very small platform.
What about?
Well, I was about to say, we spend a little bit of time, meeting with all the companies that are engaged in that area. We look, part of my incredibly long title has emerging platforms in there. But for something to move the needle at Warner, it has to be pretty established. So our focus is just on making sure we don't miss some big wave that's going to hit us and knock us off of our pedestal. We don't really think that it's something we would be investing in immediately.
I think we've got to think long term, though, to some extent. Yeah, I agree, and about near term, but whatever makes a richer experience is long term. If you can deliver it cost effectively, is going to win. So virtual reality, probably has a big role. But it's so uncertain how it's going to play out. It's a tough investable category near term. But if we sit here, X years from now, I think it'll be talked about as a big thing.
I think that's right. I mean, virtual reality, I started looking at VR companies back in '97, and not a lot has changed, honestly. It's gotten better, but I still don't think it's ready for prime time, and hopefully Facebook will really push things forward. But short and midterm, not so sure. Google Glass, not so much. But I do think there could be some good applications for the iWatch when it comes out.
Okay, so not super exciting near term. iWatch, talking about wearables, what opportunities do you see there? Somebody just mentioned kind of Nintendo Wii was a great success and kind of they missed the boat. And some people felt like there should be an opportunity with the next-gen wearables to actually have games around similar to what the Nintendo games were. Any thoughts on that, or any other thoughts on kind of the whole wearable space with either gamification or real games?
Probably all watched our kids move from Nintendo to the new Xbox with the gesturing and everything else. It's probably moving in the right direction, but I don't think it's. I think it's hard to predict who's ultimately going to win. I don't think it's going to be a winner take all in that whole thing. I think you're still going to see a lot of players and a lot of people fighting over that space. My opinion.
I'd mentioned sports games early on. This is an area where it could be relevant for sports types games, so there might be some action in that regard.
Okay, talking about sports, a different emerging subject is esports, which is very different than the real sports, like people competing against each other for specific games, and another variation of that, people competing on a skill-based game against each other for cash. I'm feeling a lot of buzz around that. It's still early. Is that an area you guys would be interested in, and if so, what?
Yeah, we're definitely interested in it. It's a huge category. Over the weekend, Dota 2 championships, $10.9 million given out, $5 million to the top team, and just selling out 10,000 people in a stadium is huge. Twitch TV, great investment and great exit. It's hard to figure out how to make money, though. I've looked at some companies in the esports platform space to enable other publishers to create their own esports competitions and so forth, but I'm not sure the model works necessarily. We could sponsor some teams, hopefully, in South Korea and maybe make some money on some of their winnings, but I don't know. I'm trying to figure it out, too, but it's a great category. And And ESPN broadcast the championships over the weekend. That's huge, right? It's prime time.
I think it's coming. I think it'll be a bigger category.
One topic we touched on is kind of the battle for the living room. Kind of next-gen consoles came out, and some are doing better than the others. What do you think how that market will play out? Is it and there's all kind of new entrants in that segment as well, and tablets are competing, and tablets connecting to other setup kind of boxes. Any thoughts how that market will play out?
I think the first time I talked about the battle for the living room was in the early 1990s when I was at 3DFX. And, the battle has been going on so long I've forgotten who's playing. I don't think there's going to be a winner. And I think that the fragmentation that exists today will probably continue for a long time. And I think that's fine. I mean, it's been so difficult to predict. I mean, if you had read, trades, 2 years ago, the console business was done. Now all of a sudden the console business is back, and Warner is one of the ones that's fueling its regrowth. But is the console, is the Xbox, is the PlayStation going to be? I have no idea. I know my house has like 4 or 5 different combatants fighting in it, and I don't know which one of them is going to win. My son, was winning, and he left the house, and so his stuff went with it. Now I have no idea what works with anything anymore. So I'm screwed.
I'd be worried about focusing on the living room. It's more like, focusing on what somebody can do while they're at Starbucks. So and making that a richer experience is, I think, where more of the focus ought to be. Right. So that would suggest tablet.
Okay. Outside of the gaming content space, kind of, do you see any very interesting kind of either technology platforms or more back-end kind of technologies within the gaming space which you see emerging or kind of interesting categories?
We've invested in a few. A few years ago, we took a guy out of Storm 8 and a guy out of Zynga who were sort of on the buy side, so they were acquiring the users, and we actually formed a company that provided that as a service, and it just got acquired recently by a company in Israel. So we've been looking for sort of the picks and shovels around the industry. So there's definitely examples like that out there that are interesting to investors.
Yeah, there's categories around publishers like Congregate. There's some interesting A/B testing companies that work with games. We're an investor in AppBoy. They're going to start to do more in the gaming space. There's gamification companies, related to it that we talk to all the time. Ad networks around gaming. Gaming is so broad, right? And there's so many business models that we look at. And we're continuing to look at more and more, and we'll make more investments around the category.
Great. So to close the whole circle, you obviously invest in companies to, at some point in time, either sell the companies or have an IPO and get a return on your investments. Do you have any thoughts on both the M&A market within gaming as well as the IPO? We had a successful King IPO. So both on IPO and M&A within gaming, and how do you think the game will play out the next 1 or 2 years?
I wouldn't actually mention the successful King IPO. I think it's nice they got public, but it's pretty low multiple. So I think it's really interesting now. I mean, there's this tremendous dichotomy of value, which we hope to take advantage of because people are really underappreciating gaming companies and overappreciating some other kinds of almost every other kind of technology company. And the skewing is so dramatic, it's almost laughable. So basically, King and the public, King and Zynga both trade at 2 times next year's revenue. King's trading at 6 times next year's EBITDA. And this is a company that has has been the most successful in the case of King of being multi-platform, multi-game, they've got a big pipeline of potential games. I mean, I think they've got a great team. I don't know them that well, but it's it's got everything in place an investor would look for, and it's valued at 6 times next year's earnings. We're looking at things that are valued at 6 times 2020 revenues. So it's there was a real dichotomy of values, and unfortunately it impacts the M&A market because the acquirers are the Kings and the Zyngas, et cetera, that have, and they don't want to acquire on a dilutive basis. So when they think about acquiring, they think about, well, we're trading for 2 times revenue. That's what we ought to be acquiring at. I mean, obviously it's all individual negotiations, but so it really, but I think there's plenty of acquisition appetite. Some of the people have, still have big cash positions, and a hunger for finding new games and new teams. So I think there's a lot of acquisition appetite, but you just have to be kind of realistic about what the values are. I hope as we sit here a couple of years from now, this has dramatically changed. There'll be some kind of regression to the mean, where gaming companies are at least trading, like the averages of the S&P 500, let alone like a high flyer. Right now, they're the lowest, valued companies in the stock market of any type that are not in troubled industries or something are gaming companies on a multiple basis, and that's not sustainable. So I think we'll see some better days ahead on valuations.
Yeah, which is why I think there's more M&A happening as well rather than IPOs. But I agree with that. They are undervalued. In terms of volume, something I wrote on my blog, I put together a chart. Before 2008, there were only 8 M&A transactions in the gaming space that were $200 million or greater. And since 2008, there have been 20 with a median of $500 million. So there's a lot more M&A activity. Last 12 months, it was roughly $12 billion. 2 of that was from Oculus Rift, and then that also includes gung-ho and investment in Supercell. But I think that a lot of the successful game companies don't want to go public and don't need to go public. They've got a lot of cash. And I don't think we're going to see IPOs from them, which is too bad because I think it could help the multiples and could actually move things forward. There are so many examples of companies doing, incredibly well. It's hard to know exactly what League of Legends is doing within Tencent, for example, but my estimate is probably $1.5 billion a year. World of Tanks is doing really well. Supercell, obviously. You've got so many private companies that if they were public, the multiples would be much greater. But, why should they go public? And so there's still some high valuations in the private markets that are happening that will continue to happen. I would like to see, more public companies go out, or even King or Zynga turn around and show that they have a replicable model and have those multiples go up, because it would really help. It would help the entire industry. But for now, there's a pretty vibrant M&A market, and that's something that I think we've all taken advantage of.
One of the things, I don't know if I can articulate this or not, so if I sound like I'm babbling, forgive me in advance. But one of the challenges that Western companies have right now in the M&A market, and this includes a Zynga as well as a Warner, is that we're still basically buying on a revenue base that's Western based. And so when we go into a bidding contest against a company that is Eastern based, that is buying a Western based company, they can use a Eastern revenue lift to the company that a company like Warner or even a Zynga or anybody else really can't do. And I really think that one of the interesting developments in the next 5 years is going to be the emergence of some very strong Eastern competitors who are finding it easier to move west than we are finding it to move east. And so you see something like a Tencent. I mean, we were, I think it's far enough along I can say, we were very interested in League of Legends and Riot. But Tencent not only had a investment that they'd gotten, so they were playing with a lower basis than we were, but they also were factoring in sales in China and sales in the rest of Asia as they valued the company. So there was no way, without busting any parameter that we could possibly have come up with on valuation, that we could have gone toe-to-toe with Tencent to buy Riot. And they were right, and we were right. It was just that they could make it a bigger company than we were able to make it. Simultaneously, we've seen, I think that was part of what was going on with Funzio, is that they saw an opportunity to take it more internationally, more globally than we can. So one of the priorities for Warner, we didn't talk about this earlier, but one of the priorities for Warner is we're trying to become global in our games business, in part because we know if we don't, we have a risk, just a 5-year, 10-year risk of becoming a regional player. And I think that's something that is going to be one of the big trends in gaming in the next 5 to 10 years, is the emergence of the East and perhaps the marginalization of the West in gaming.
Hey, Greg, just to scare you more, Funzio had an offer to do an additional round of financing at a pre-money that was more than what Gree paid. So,
Wait, but if you're interested in Funzio, we just backed the team that created all the games, called Mastermind Studios, and we closed a few months ago. So you should talk to them.
I think if you're raising money, you should also think about what's your exit going to be and how many buyers there are, because there are some $500 million exits, but there's not a lot. So if you're thinking about building something that's worth $50 million, raise it from angels or individuals that love you. If you're raising it from venture capitalists, the rule in venture capital is that every deal should try to return your entire fund. So if you do the math, you really are looking for really big exits, and then there's only so many buyers. So it's like you sort of have to kind of, as individuals, decide, is this a lifestyle business? Or are you really going to take a lot of capital and go for the home run? And I don't think people always think that through at a personal level when they're thinking about their life and, making a game. So just a thought there.
Great. With that,